Doreen is calling in Kelowna, BC. Hi, Doreen. Hello, Doreen.
Hi, can you hear me?
Yep, go ahead.
Okay. I bought some Avon earlier this year, and it's gone down quite a bit. And I have a fairly long time frame, but I just wondered whether you thought it was worth it to hold on to it, or whether I'd be better to cut my losses on that.
Right.
I'll hang up and listen.
Okay, thanks, Doreen.
Thank you.
Right, Doreen. So you're facing one of those tough decisions. And here's what I would say. If you're in a bull market, you want to own things that are participating. We only get good markets from time to time. Now, we think that we've entered a longer-term bull market that could go on for quite some time. But it's on the back of an improving economy. But look, you've got a stock that is not performing in a very strong market. Now, if you look at the underlying fundamentals, you can understand why revenue growth has been falling. So revenue is not growing, it's falling. Earnings have been falling. The consumer staples group has been one of the weakest performing groups in the market. So you don't have any sector strength on your side. It is in the U.S., so you're winning a little on the currency. But I have to say, I think you have to move on here. The hardest thing to do in investing is two things. One is to stay in the positions that are working as long as they keep on working. People are always looking for where's the turning point, use a stop loss. Hold it until you get stopped out. The second thing is when something isn't working, knowing when to cut and run and move on. And I think this is one that you just have to say, look, there's so many stocks doing well, you got to move on and do something else. Even in this group, there's better names.
Let your winners run and cut your losses.
Especially if you're in a secular bull market, stocks will go up a lot further than you think. You want to stay in the ones that are working.
Okay, thanks for that, Doreen. Next up is Louisa, who's in Hamilton. Good evening.
Hi there. How are you?
Very well. How are you?
Very good, thank you. David, my question is about Cineplex. I love popcorn and movies and bought this about a year ago, I think in the low 30s. And then recently I sold half my position, hoping it would go down to 38 and I'd rebuy it. It didn't hit 38, and now I'm afraid to get back in. What's your comment, and what do you see for it in the future?
Sure.
Thank you. I'll hang up.
So, Louisa, Cineplex is a big position of ours. We've talked about it on Market Call a few times in the past. This is a great company. They have found lots of ways to raise their earnings and their margins. One of the most important things in a company like Cineplex is what does the calendar look like of new releases? And there's about 18 months of very significant releases coming forward for the movie industry. Cineplex is doing a good job of raising their revenue per visitor with some of their premium locations. This is a company I think you buy and you put it away. We have a pretty good stake in it. It pulled back basically to the moving average and has turned back higher. I think you can buy the stock here and hold it. You get paid very well, and you'll get pretty good dividend growth going forward. Their biggest problem is what to do with the cash.
So don't worry that it didn't hit 38. Get in now and just...
Yeah, the market doesn't care what your target price is. From here back to the highs, $45 is a nice return to begin with. And I think that as you go through the summer and into the fall, you're going to benefit from a very strong release calendar.
Thanks, Louisa. We have Sylvia, who is in Markham, Ontario now. Go ahead, Sylvia.
Hi. I just want to know if there's still some upside to CCL Industries. I have a small position on it, and I want to know if I should continue to hold it, and if David has a position on it also. Okay, thanks very much.
I looked at this today. It's just a rocket ship.
Yeah, Sylvia, this is one of the great companies that we don't own. And it's a company I would love to own. For us, one of the things that we spend a lot of time looking at is it liquid enough that we could sell it if something started to go wrong? And sadly for us, despite the fact it's a big company, there's a very limited float in the marketplace. And so if we built a position that would be meaningful for us and our clients, we would be stuck one way or the other. So I think it's a great company, and as a private investor, it's one that you can benefit from. We don't own it. And so I have to tell you, I haven't spent a lot of time looking at it just because we are limited in that way.
But to your point, let your winners run. Sylvia should just let it go here.
This is one that's done well for years. It's a great company.
Thanks, Sylvia. Lots of questions here tonight for David, and we'll get to a bunch here in the Market Call Minute. Chris in Toronto called in about Crescent Point Energy.
We like this sector. Stock's behaving pretty well. Reducing their dividend reinvestment plan has certainly been helpful. It's one that you could own. I think there may be better names, but you're gonna win from the sector.
Frank in Montreal phoned about Banco Santander, SAN.
We would be cautious of companies that have exposure to Latin America, so this is one that I'd be a little bit more careful of. It would benefit if there was additional easing in Europe. We like the financials in general. I just think there might be better names.
Don in Mississauga on Air Canada.
We like the airlines. I would prefer to own a U.S. airline currently. We've got a little bit of slowness in the Canadian economy, a little bit of improvement in the U.S. We own American Airlines. We do own Air Canada bonds. We did own the stock. We've come out of the stock.
Nicole called in from Ottawa on Alaris Royalty.
Right. So this is a company that we own that was a disappointment. We got stopped out of some of our position. We got stuck in a little bit. We'll have to see where things go here. But basically, they had one of their investments go bad. I would be a seller here on strength.
Okay, and then Rob on Cameco.
This is a company that we own. There has been a lot of consolidation in the uranium producers. We think that the utilities are going to be back buying additional uranium going forward, and we think that there's significant upside here.
All right, so that's that portion of the show. Lots to go, though. We have top picks coming up after this break.